Welcome back to REI Accounting Talk. My name is Sarah Bratcher. I'm here with my co-host Kat Langevin, and we like to talk everything accounting and real estate investing. And today we have a listener that sent in a question, and Kat's gonna tell us that, and we're gonna break it down for you.
Yes. So the question was, when you purchase a property, how do you calculate depreciation? Because you can't really apply depreciation to land. So they're like, well, how do I know how to break that down? So let's talk about how we do it and see if that helps. Try to do it as
Yeah.
concise as possible. So
I
do you
Sure.
want to go, Sarah?
I usually rely on the CPA's journal adjusting journal entries when they get done with it. I ask the CPA for the adjusting journal entry, and th- to make sure that to double check that you're kind of right in the ballpark. There's a couple of different ways you can do it. I personally, with all of our rentals, we have had to get an appraisal on, and because we've done ARVs and stuff like that, we do like construction loans and stuff. Um, so we get the appraisals for the current one and the ARV appraisal after we do the renovations. The biggest thing that I need from there is I need to separate land and the building and the improvements. This is not a cost segregation. This is just a simple getting land out of there. And then I do a very simple calculation. We don't use a lot of bonus depreciation and all that for these. We just use the straight line, 27 and a half years. So then I will take the purchase price minus the land and divide it by 27 and a half years. And that will be my annual depreciation expense for that property. How, how, how do you do it? I know there's several ways we could do this.
Yeah, so because I don't buy with appraisals most of the time, I just buy cash, like no appraisal contingency. So I have to go through the property tax website. So usually, let's say I bought a property for $100,000. I go to the property appraiser website and I say that this is magically a precise 100K in there. And the appraisers will say, okay, $60,000 is, improvements and $40,000 is land. So I will take out the improvement part, and you would have to, if it's never going to be exact like that, so you would have to say, okay, that's a 60-40 ratio, right? So 60%, 60,000 over 100,000 is going to be 60%. And I applied that to my purchase price. And that's how I come up with the calculation because in an ideal world, having an appraisal will be a lot more accurate in that sense because they do the calculation for you. But having that property appraiser, I don't know, um, in Georgia, for example, is something called Q Public, where they have all of these information each county has. So if you go to Google and say property appraiser website, you should be able to find yours and look for that if you don't have an appraisal already, like Sarah
Yeah,
has.
I love that. I also want to add, I've had people ask me over the years, they want to, their year three of owning this property, and they don't understand why the books still show the asset as the original purchase price, and they want to depreciate more because its values more. And general accepted accounting principles, you only use the purchase price. There's no other transaction that has gone through to make that more. The only way that would update is if you had, if there was a transaction involved, like sometimes a refinance and a new closing statement comes through, and if there's more uh, on the books there, is that correct? Is that how you would?
Yeah, so usually, the only thing that also would change is like if you made improvements, like if you have a new HVAC, then that's going to be additional depreciation. But unfortunately, like you can't really, it's they're looking at historic, like what you actually paid. But this is also the way that you're able to marginally like take out money without paying taxes when you
Yeah.
do refinances, right? Because you're not increasing that purchase price. But yeah, like closing costs, you can amortize too and write off whenever you refinance. So those are the things that you can add up a little bit, but unfortunately, as long as you own that property, the value is just going to continue to go
Yeah.
down instead of up.
So in long and short, if you own it for 30 years and you bought it at $100 a square foot and 5 years later it's $150 a square foot, that has no bearing on what your books say and what your depreciation is. Um, just the actual improvements that you do will affect that.
Yeah, yeah. So basically the way it works is by year 27 and a half, you only going to have land. So the building would have 100% depreciated, which means when you sell it, you're going to have to pay taxes on anything above the land value. Which I've actually met one person like that. I haven't met that many old like investors that have owned properties for that long. And the guy was like, "Yeah, I fully depreciated my asset. It's useless to me at this point because I can't write it off." So that's why he
Yeah.
was selling it.
You could get in oh, we could go down a whole rabbit hole of that about inheritance and step up the basis and being able to do that so
Oh
you
yeah,
can
yeah,
avoid taxes that way too, if you put it in that way. But
yeah,
all right, well that's our quick wrap up of depreciation and how to double check your accountant to see where they're at. And if you want a placeholder every month, some people like to see that depreciation in there so they kind of know in their mind. That's how you would do it. But if you fully trust your CPA and you vouch for them and you've checked their depreciation, uh, then the best way I think would be to just get the adjusting journal entry from them to put that
yeah.
in there. Again, this is not tax advice. We're not telling you, matter of fact, to do this in every situation because everybody's situation is very unique. And uh, yeah, you need to ask your tax preparer for more information specific to your case. So I'm going to put our Instagram handle in the show notes, and we'll see you next time. But you're welcome to DM us on Instagram. We love to talk about accounting anytime. Just hit us up and let us know. Bye.
Hi guys.